How's it? Sean here from Mel's YouTube Bookside YouTube channel. All right, we're going to start lesson number 3 today. Please make sure you've gone through the previous lesson, lesson number 2. It's very important because, accountancy and bookkeeping builds in complexity. And it's a very intricate activity. So you need to, it's very focused on following steps. So you need to have followed the other lessons. Very important. Okay. If you haven't, please go watch them. I'm going to do a quick recap on them, just to give you, just to help you remember this. Okay, so in lesson 2, what we did was we opened up a supplier's control account. All right, so we had some factories that we went and bought our goods for our shop, and factory A and factory B. So we opened up that control account. Then we had some customers, Mr. Collins, Mr. Welsh, Mr. Collins Church, and Mr. Welsh, and they came and bought some stock from us. And then we opened up a customers control account for them. Then finally, we did an assets and depreciation control account, where we counted for the depreciation of our assets, like our furniture, our cash register, stuff that we've got in our company, in our business, and we did the depreciation on them. Please go watch this lesson. It's very important. It leads all into this lesson I'm going to do today. Okay, so let's get started on lesson number 3. Okay, as always, watch my mouse because that follows my train of thought. All right, so we're going to open up a capital control account. The deposit of $15,000 from the owner of the business goes into the capital account as a loan to the business, and he will get it back when the business is sold or when he retires. So basically, you and me that own the business. Whenever we own a business, we put capital in because the business doesn't start immediately making a profit. It needs to run for a little bit of time. Okay, and that capital is going to help the business. Okay, so it's a capital account, it's a long-term liability, and it's put in as a liability on the credit side of the capital account. The money is deposited in the bank from the owner as a loan. Okay, so total $15,000 loan to start the business and owed back to the owner when sold, to put in on the credit side in the trial balance. All right, so the next thing we're going to do is open up a bicycle shop cash book statement. This is the statement from Absa Bank on the 31st of March. Okay, so the cash book is a written statement in where expenses have been paid and what income has been received. For example, money paid to suppliers and money received from customers, including the running costs of the business. Okay, so on the debit side, okay, we've got rent, which includes VAT of $100. We've got our rent deposit of $50. We've got our stationery from CNA, $10 with VAT of $1.31. We've got petrol, we've got electricity and water, we've got petty cash, we've got cell phones. These entries here, these journal entries. Okay, these items that we've got here as marked, that I've got here as marked as journal entries. They're going to go in a journal account, but that's for later. I'm just putting them here to remind you, just as a reminder that these are journal entries. Cash register and desks and chairs. And as I was just saying now, remember the cash register that we did in the last episode, and the office furniture, the depreciation on those. So now what we're going to do is we're going to put an entry on the debit side for the purchases of those things. Okay, plus their VAT. They also charge VAT on that. Desks, chairs, like I showed you, bank charges, wages to our employees, salary, medical aid, UIF, and PAYE. Okay, and the supply. This factory A, this is the supply. Now we've gone and this is the amount, $1,725 that we've paid out to factory A. We've actually paid him that for the goods we bought from him. Now on the credit side comes the owner's loan, that capital that the owner put in. Okay, $15,000. And Mr. Collins and Mr. Church then also paid us for the invoices we sent to them for the goods they bought from us. We put their amounts in there and the interest received. Then we total up the credit side. We get $17,176.25. And we total up the debit side. We get $2,557.50. We add up all the VAT. It comes to $34.97. Now, the Absa Bank net balance on the 31st of March, will be $17,176.25 minus this debit side of $2,557.50 gives us a balance of $14,618.75. We put that to the trial balance on the debit side. The VAT total of $34.97 VAT we put on the debit side in the VAT control account. And we're going to do a VAT control account at the end of this lesson. So it's coming. We're going to show you where all that goes. Now, the bank net total at the end of March is $14,618.75 to carry forward to April in the cash book on the credit side, because that's what's actually left over. We also put on the debit side of the trial balance. We're gonna just the suppliers control account that we opened in the last lesson. We're going to enter that amount that we've now paid them, this 1725. We're going to put that on the debit side because that's now a payment. We've actually paid that company. So the suppliers control accounts, as you remember from lesson number 2, always is on the credit side in the general ledger. So once again, I'm going to repeat all of this. This entire account that we opened already is always going on the credit side of the general ledger. And this is just an example. All right, so the suppliers control accounts, including VAT, on the credit side. Okay, so as we had in the earlier lesson, the lesson number 2, we put factory warehouse A and factory B on the credit side, including we put the VAT as well, and we put the totals over there. Now, because we've gone and paid factory A this 1725, we paid him up in full, we put that amount on the debit side of the suppliers control account. Okay, so we add up all the amounts, we add up the totals of the credit, that's $2,587.50. We add up the VAT, $337.50 in dollars, and we add up the debit side of what we've paid. Okay, to factory A. We didn't pay anything. Factory B is still outstanding. So it comes to $1,725 in total. So we take the total supplies that we owe them, okay, $2,587.50. We take away the total payments that we've made, for example, to factory A, the total amount on the debit side, and we get to a net total to the suppliers of $862.50. We put to the suppliers control the net total for the month of March to the trial balance on the credit side. The VAT total that we added up here, we put that to the VAT control account for the month of March on the debit side. And we're still going to do the VAT control account. So this amount at the end of the lesson, this amount is put on the debit side of the VAT control account. And we'll go down and do that at the end of the lesson. Okay, so the supplier's outstanding balance carried forward into the month of April is $862.50. We put that on the credit side. So on the supplier's control account, on the credit side, we add that in there. Okay. All right, so like we've done the supplier's control accounts, we're going to now do the customer's control account. Okay, as you remember, from lesson number 2, we opened up a customer's control account for the customers that actually bought from us. And here's the amounts that they all bought. They came and bought stock from us. But because now some of the customers have paid us, like Collins and Church paid us, Welsh didn't, but Collins and Church did, we can now enter their payments on the credit side of the customer's control account. Now I'm going to go back to the cash book at the top here. As you remember in the cash book that we opened, because customers Collins and Church paid us, we entered in the amounts that they now paid us in the cash book, so you can see that. And let me get down here into the customer's control account, we've now also entered those amounts that they paid us. Always, as I said before, this here is an example. The customer's invoices are always entered on the debit side in the general ledger. So this entire account, as you see it, once again, I'm going to repeat myself, goes always on the debit side in the general ledger. And this is how it looks. Just to repeat that again. All right, so the customer's control account, including VAT on the debit side. That's what we originally opened it for, but we now entered in Collins and Church because they paid us. So let's add up the total credit side, $2,156.25. And then we add up the total on the debit side, $2,961.25, and then we add all the VAT up, okay, of that we included in those invoices to him of $386.25. We take the total customers that we invoiced out to that still owe us of $2,961.25. We take out we minus the total payments for customer Collins and Church, and also if Welsh had paid, but he didn't. And we get a net total for the customers of $805. We put that total to the customer control in the trial balance on the debit side. And the VAT of $386.25 we put to the VAT control account on the credit side. And we're still going to do the VAT control account at the end of the lesson. All right, so that's the amount we put on the credit side of the VAT control account. All right, so the customer's outstanding balance carried forward and put into the month of April on the debit side is $805. And in the month of April, we will then carry that forward on the debit side because that's money still owing us. Like Welsh didn't pay us, he's still outstanding. Okay, so now we're going to do the petty cash book. Okay, petty cash taken from the bank and kept in a cash box or safe. Okay, so for the month of March, the petty cash, just follow my mouse, the petty cash is kept for small miscellaneous expenses paid in cash for small cash sales, and usually the cash is kept in a small cash box or safe. The cash is used for small items such as staff refreshments, cleaning, petrol, casual wages, etc., small cash sales. Very important. All cash receipts for items bought or sold are entered in the petty cash book the same way it's entered in the cash book. The cash book at the end of the day must be locked away in the safe. Now, remember, we drew petty cash for the month of March, and that's this APSA Cash 45 that we're going to credit in the petty cash book. But we debited that amount in the cash book, the cash book statement, the statement from APSA Bank. Over here, where's the petty cash? So we withdrew 45 Rand for cash, for petty cash for the month of March. Okay, so that amount was debited here in the cash book. We are now opening the petty cash book and we are now crediting that amount. So that's the money we withdrew from the bank. All right, so on the debit side, all the expenses, all the money we used for petty cash, like we bought milk, we paid for tea, we cleaning, we casual wages, we added up all, excluding VAT. None of these items have VAT on them on the petty cash. So we added up this is the money we withdrew from the bank for petty cash, and we put in a safe. We added it up, it came to $45. Then we added up all the miscellaneous, all the little items we spent that petty cash on, and it came to $35.50. The net total, which means that from that 35 taken from the 45, gives us $9.50. That's what's left. We carry that forward and we credit the total of the petty cash. In the petty cash book for April, we credit that amount, that total amount, we put it over here because it's money left over. We didn't spend the entire 45 Rand, so it's still money we have. And we debit the petty cash. We debit the petty cash control account in the trial balance. Okay, so now we're going to end off with the VAT control account. Remember earlier when we were doing the suppliers control account and the customers control account, remember I said those VAT figures, we're going to enter them now in the VAT control account? Well, we've come to that section now. Now we're going to open up a VAT control account. Okay, so from the suppliers control account, we got the VAT total of $337.50. From the customers control account, we brought forward the VAT of $386.25. And from the cash book, we had a VAT of $34.97. So we've opened up a VAT control account and we've entered these items in there. So from the suppliers control account, we debited that VAT of theirs with $337.50. The customers control VAT that we brought forward, we credited the VAT control account with $386.25. And from the cash book, okay, the APSA cash book, we then brought forward an amount of $34.97 in VAT from the cash book. Okay, so we added up the totals. On the credit side, it was $386.25. And we added up the total of the debit side of $372.47. Okay, watch my mouse, the sales tax net value on the credit side. So basically, you're going to work out what we're going to pay the receiver. All right, so then we take the $386.25. We take away from it the $372.47, and we get a total of $13.78. Now, this is then paid to the receiver of revenue. The taxman gets this money. Then we put this amount in the trial balance on the credit side, this $13.78. So what we've done in this lesson is we entered the total VAT from the suppliers and the customers' control accounts plus the total VAT from the cash book. And that's how we put it in the VAT control account. All right, so we've come to the end of lesson 3. Okay, well done. Okay, it was quite a long lesson. Yeah, I hope I explained it well. I did the best I could to try and explain. I hope you understood everything. Please, if you like this video, please share it with everybody you know and subscribe to the channel. And of course, if you have any questions, queries, or you want to leave some comments, feel free to do that as well. All right. Good day on you.